Now, the Johannesburg Stock Exchange expected to continue to track gains as investors keep a close eye on the war in Ukraine and further sanctions against Russia. Now, the higher commodity prices are providing an effective buffer, but sentiment remains nervous as Russia closes in on Kyiv. Jimmy Moyaha is the independent analyst, and he joins us now to talk us through how the markets are shaping up this morning. Jimmy, good morning to you, and a warm welcome on this Wednesday. Give us your sense of how the JSE has opened in early trade, with a particular focus on the rand, which has reached the 16 rand to the dollar mark.
Good morning, Dolly. Good morning to the viewers. The markets opened on the local front quite firm. We saw that the JSE was up a little. We're seeing a couple of stocks up, mainly your mining stocks trading up. We're seeing some financial stocks trading down. But I think what's most notable about the mining stocks that are trading up is Exxaro and Sasol at one point are trading some 4% up on the day off the back of yesterday's increase in the oil price. That sharp increase pushing oil above $110 a barrel in some cases, and it's still maintaining at that level. But we're seeing on the local front that your local stocks are performing relatively well. We're seeing the rand take a bit of a negative turn. We thought we were going to hover closer to that 15 rand mark, but we're closer towards 15.50, heading for that 16 rand mark, and we could very well reach 16 rand with the US conversation happening later in the month around the interest rates and the decision that they're going to make there. We know we're expecting a rate hike, but we will have to see just the significance of that rate hike and how that's going to impact the dollar, and that could potentially be a catalyst to push the rand above 16 rand.
Let's talk oil prices, surging to a 7-year high in early trade after hefty sanctions on Russia's banks amid that intensifying war in Ukraine. Talk us through those numbers and, in particular, the volatility that is going to come with that.
Certainly. I mean, we saw the oil price, as I said yesterday, shoot above the $100 a barrel mark. We're sitting at about $110 a barrel on Brent at the moment, and we are expecting that the current tensions in the Ukraine, as we said previously, that the longer these tensions go on and the more sanctions are imposed, the more it's going to affect things. There's been conversations around the oil price or the oil supply being affected as those sanctions are imposed on Russia. We know Russia supplies about 8% of the world's oil demand. They are also part of the OPEC Plus region, and from that perspective we know that they've got quotas and things that they need to meet there. We know OPEC Plus is meeting today at around 2 o'clock South African time, and that meeting is expected to outline whether or not OPEC will continue with the expected increase of 400,000 barrels per day of oil, or whether they're going to adjust that in line with the news that's come out now. The previous sentiments were that the current situation on the oil price is not necessarily as a shortage of demand or shortage of supply, but rather as a result of geopolitical tensions. We know that the International Energy Agency countries, so that's the US and some 30 other countries, have announced yesterday that they're increasing, or they're going to be releasing some 60 million barrels of oil reserves into the market to aim to stabilize the price and the supply constraints that could be caused by the tensions in Russia. And we know that at the moment, as we said, locally on the local front, your Sasol and Exxaro, your coal stocks have been performing really well off the back of these tensions. They're trading up for the day on the local markets. But overall, the international expectation around what's happening with oil and what's happening with the potential sanctions that will be imposed and those that have been imposed at the moment are all pointing towards this afternoon's OPEC meeting, for one, to see where we sit on a supply output and production basis, and whether or not there are going to be any adjustments made in light of the news that's come up.
Sure. Let's talk company news. Woolworths saying that tough trading conditions and the lockdowns in Australia have weighed on revenue, but nonetheless, it's proceeding with a dividend. Talk us through those numbers.
Yeah, so Woolworths numbers came in. Online sales was up about 20% for them. Their turnover was it was down about 1%, but their online sales for their group accounted for about 13% of turnover sales. And they also announced that their profit before tax was down some 36 odd percent. Their headline earnings per share was expected to be down as well, and they cited higher freight costs and higher supply chain disruptions alongside your July unrest as some of the main factors that have negatively impacted them. If we look at their fashion and beauty business, the online sales was up there, the turnover sales was up there, but they did reduce their footprint some 6%. So they outlined that they had less of a footprint on the commercial side of things, but that didn't really affect their sales. On the food side of it as well, they said that their online sales was up there. Their expenditure was up from a group level as well, as they invested in that online food business and the technologies that went into delivering products like the Woolies Dash. And they also outlined that their food business's operating profits were down some 8%. So overall, slight decline in revenue from Woolies, but it looks as though some of their business units are performing a little better.
Let's conclude the conversation with Cashbuild, also publishing its interim results. How have they fared in the period under review?
As well as expected, their revenues were down some 12%, their gross profits were down some 11%, their headline earnings per share and basic earnings per share were also negative, and they did outline that they paid a dividend, so they paid a final dividend, and their cash and cash equivalents was down some 33% as a result of that. I think what's most concerning at the moment about Cashbuild is that their net asset value per share was down some 5%, and they also outlined that the continued uncertainty around COVID and continued uncertainty around demand within their market is going to be affecting their second half of the year numbers, and that potentially could affect their overall financial performance for the year. So Cashbuild's numbers not the best for them at the moment, but we're hoping that they'll be able to turn it around in the second half of the year.